Welcome to the Capital Spreads weekly update. Today is Wednesday, the 17th of November 2010, and the week so far, well, it had actually been quite a quiet start to the week until yesterday, where we had a triple whammy of relatively negative economic news coming out. The first was the fact that Ireland might need additional funding from the European Union to help support its banking and financial system. The second was the fact that China announced that they might introduce some monetary tightening to cool the asset bubble that we're starting to get in China, as well as the inflation. And the third is the fact that some people are starting to question whether quantitative easing out of the US was actually enough to help keep the sustained momentum in the US on the upside. So looking at the situation as it currently stands, the FTSE is trading around 56.70. It's down about 8 points in the day. Despite the sell-off we've had over the last few days or so, the FTSE is still just tentatively holding onto its uptrend. I have a chart to show you what I mean regarding this. As I mentioned, the FTSE is currently trading around 56.70. If it continues to hold onto support around here, you're possibly seeing it going up to about 5800 again. However, if it doesn't and it continues to fall on the downside, you're looking at support around 5600 and then down around 5500. However, more importantly than that is the fact that it is still above its 100-day and 200-day moving average, although it is just touching its 50-day average, moving average. Now, we are at a bit of a crossroads in which way the FTSE might go from here. However, I would say on the whole the UK economy seems to be doing relatively better compared to our European neighbours. For example, our GDP seems to be growing now, and the jobless rate seems to have fallen slightly, although not a substantial amount. Now those both are boding well for our economy. Also the fact that we seem to have got a better hold of our budget and economic situation than some of our European neighbours, and that's helping push the FTSE as well as keep sterling dollar relatively strong at the moment. Looking at Eurodollar at the moment, it's currently trading around 135.00. It came off a recent high of around 142.92, which was off the back of the announcement of quantitative easing at the United States. Again, I have another chart to show you regarding Eurodollar. As it can be seen, Eurodollar has come off recently quite strongly, and it seems to have broken through and reversed the uptrend it had established since the beginning of September. It is currently being supported around 135.00. However, if it continues to fall from here, we're looking at support possibly around 132.00 and then even as low as 130.00. However, if it continues to find support around here, we could certainly see it going back up to around 138.00. Now, the fall in euro has principally been off the fact that Ireland might need additional funds. However, questions continue to remain whether other countries in the European Union, for example Portugal, Spain and Greece, who are in a worse situation than Ireland, might actually need additional funds even over and above the support that Ireland needs. Again, this is fueling quite negative sentiment for the Eurozone at the moment. Gold is currently trading around 1340. It finally looks to have broken the uptrend it established back in July 2010. Again, I have one more chart to show you regarding gold. Gold recently had a strong rally up off the back of partly the weakening in the US dollar, which was off the back of the announcement of quantitative easing at the United States, and consequently gold rallied all the way up to about 1425. It has subsequently come off, which is again off the back of all the other negative news that we have been having. It continues trading around 1340 at the moment. Near-term support would probably be around 1320, whereas on the upside you're possibly looking around 1360 or 1370. Oil is currently trading around 81.80. It seems to have established a relatively recent new trading range between $80 and $90. Now, oil seems to reflect very much the global economic outlook, and at the moment, obviously, the sentiment seems to be quite negative, and as a result, oil has had quite a strong sell-off. That, and as well as the fact that we had a recent strengthening in the US dollar, have both helped contribute to oil coming off. However, it was only a week ago we were looking at oil up around $88. In terms of the week going forward, it's a relatively quiet week in terms of economic figures for the rest of this week. Two figures to keep in mind will be the UK retail sales coming out tomorrow, which is quite a large and important sector of the UK economy, as well as the initial jobless claims. Later towards the middle of next week, you've got a number of bigger figures. The first is the UK GDP and the second is the US GDP. Now those will be watched a lot more closely in terms of whether the economic uptrend movement and support that we've had over the last few weeks or so can be continued. In terms of client activity, many of our clients have been fading these moves that we've had recently. So at the moment they're long the indices, DAX, Dow, FTSE, S&P. They continue to hold long positions in gold, a position they've had for a very, very long period of time, over a year in some, I believe. They've also gone long oil at the moment, and they have a long position in sterling yen. In terms of a theme of the week, I would say the theme of the week very much seems to be the fickle nature and the fickle sentiment in the financial markets. It was only 2 weeks ago that we were looking very bullish and looking like we might be breaking to the upside, and we might be through the worst of the situation that we've been in recently. However, it hasn't taken long for the market to turn around, and the sentiment seems to be very negative now. That sentiment on the negative side looks like it might continue at least for a little while longer, until this situation with Ireland, as well as what will happen with Greece and some of the other European countries, starts to get resolved. That's it for now. As usual, if you have any feedback, it's media@capitalspreads.com.